Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday, the 12th of May, 2020. We're about 5:40 in the afternoon, which means we're already into the trade of Wednesday. And as you can see, you broke down, by the way, hard in the stock indices. You're getting some follow-through in them. In the metal, gold is holding stable. Most of the other metals are trying to work themselves lower. On the energy market, the market saw the API numbers. Now it wants to see what the EIA is going to offer. But you know the numbers are going to still come in on the larger size because we're still getting the impact of all these cutbacks. It will happen. The other thing that's going to happen, and I saw it today, and I appreciate everybody that wrote and wished me the best with my eye surgery. I can now actually see these boards. I can look at my computer screen for the first time in years, many, many years, without a pair of glasses on and see it. And it's just a great feeling when that happens. These are like miracles. And everything's bright again, which is phenomenal. But to make a long story short, I was looking at traffic. And traffic in Chicago, at least, is returning. I remember 3 weeks ago, you'd go over the highways and so on, nobody was on them. All of a sudden, they're getting crowded. Now, it's not like a regular rush hour. I'm not saying that, but it's happening. My wife's in retailing at one of the big jewelers in Chicago, big national, I won't mention it. Been with them decades. And to make a long story short, she got a call yesterday. They want her to return, and she went in today. First time since March that she's gone back. So things are gradually happening. That's what I'm saying. And this is Chicago, and we have one of the most stringent rules. Other places, I imagine it's pretty loose. I saw Austin, Texas's mayor today. They're open up in a lot of areas, and he doesn't agree with the whole state, so he's a little stringent on them too, but things are happening. I don't know what happened with Elon Musk today as he opened his California plant and said, "Come arrest me. Don't arrest anybody else. This is my call." Actually, he's right. Defense industries down in the lower part of the state, they're all working. Do you honestly think they look any different than the lines he set up? I don't. I'm sure he's taken the right steps. You can't do this any longer. You can't have one set of rules. They have one auto manufacturer in California. He gave them a gift. He'll move out before you know what's going on if they're not careful. So we take a look at the market here, and you have not, and this is what I look at, you have not been able to get up to the 18-week moving average of closes at all since this big break. Okay, I look at what the market has done, and I'm the first to say it came off the low and made a 62% retracement, which I didn't even think it was going to do that. So that's another fact, but it made it. Okay. Now what do we have? We have a market that's still in an uptrend. It's got higher lows, higher highs. To break that, you've got to take out 28.23. If you take that out, you end up with a pattern of a higher high, lower low. Doesn't mean you're in a downtrend. The market's now fighting on a regular basis suddenly at the 18-day average of closes. And on this whole rally, unlike in the NASDAQ, you're still under the 100-day moving average in green and the 200-day average. So where's the Bollinger Band, the other resistance? You've hit it actually you hit it one time. You didn't even hit it this time, and that was it. The market has backed away. Now something else has happened. This market had very wide Bollinger Bands as this big break in March took place, and all of a sudden you're going sideways again. Sideways is from where other trends develop. Now, it could be a resumption of the uptrend. It could be a new wave to the downside. You don't know. How often have you heard me say that markets like to lock in on the 18-day average of closes, which is the red line, and from there figure out where they're going? So what you're getting now is what we call a pipe. The market has got narrow Bollinger Bands, sort of going sideways and spinning against that 18-day average of closes. The bulls have the upper hand until 28.23 is taken out. You're not in overbought territory. You've worked that off. When you got up here, this was overbought. You made a run at the Bollinger Band, couldn't hit it. Unfortunately, for those that maybe are playing it long, you immediately went back to that neutral number. Now you've got momentum down. So you have divergence. You've got momentum that is corrected and now pointing down out of the overbought. The bias is turned down because you're underneath the 18-day average, and the swing line is up. The chart is a mess. When I look at the NASDAQ, it ran for the past few days at the upper Bollinger Band. Did it embed? So let's take a look. Let's come right back where the numbers begin at 80. So I want to come right here, not there, here. Day 1 of embedding, May 8th. Day 2, both numbers over 80 again. So you need 3 days in a row to embed. And you got that yesterday, which is, you actually got it on, let me come back here. You got it yesterday. Yesterday, day before, let me just make sure I'm right on this. It's Friday, Monday, and today, Tuesday. Today, what we're looking at is already Wednesday trade. I want you to watch this. You've lost the embedded reading in both numbers. I think this right now is screaming liquidation. That's what I think. Doesn't mean you have to. I'm not trading. I'm not giving you advice. But when you lose the embedded reading, my work, what I teach, is that the odds strongly favor prices are going to go back to at least the 18-day average of closes. The fact that both are lost, and I admit, it's intraday. I mean, this is the very beginning of the session for Wednesday. But when both lose it, you're going to have a heck of a rally day to get that market to keep it. I think the pros are liquidating tonight. I wouldn't be surprised if we get back to that 18-day average in short order and the market tries to regroup. You've got to work off the oversold condition. When you lose a bullish embedded reading, the first thing that happens if the numbers slip out of over 80 reading, I consider anything above 70, either number is being overbought. So if they don't re-embed it right away tomorrow, I'm looking for those numbers to come down and get back under the 70. What can rescue the market? Well, let's assume you get a rally late in the day and then you re-embed on Thursday. That can happen. The odds don't favor it. Everything about charting is in the odds. When we step in here to the Dow, I want you to look at this sideways action. Momentum down, not in oversold territory. You have to be under 30 to do it, which means even if the market broke through, first of all, you can't get a sell signal on this. If you were to take out 23,428 and you've gotten down to 23,443, you'd break the uptrend. You'd have a higher high and lower low, but no trend to go short on. So I don't see too much in that chart. In the Russell, you have the market coming back to the 18-day average, unable to advance here at all. Momentum pointing down just the way it's doing in the Dow. So you're not getting buy signals. You're not getting sell signals in these two markets. When I come to the Vix Cash, I think today, the first day, I want you to look at this. I guess it was yesterday that it hit it. I have been saying that the first time you hit the lower Bollinger Band, I think the pros are going to write puts to try to get back to the closest moving average. In this particular market, that would be 32.65. I'm curious as can be to see if that happens. It closed 29.47. It worked here. I think it's going to start working again here. It's not a trade wreck. That's what I think the market's doing. I noticed it way back here. This was a very common feat the market was doing then. And it's much more difficult to write a call because you've got unlimited area, whereas when you're down to a 10 or 15, don't get me wrong, I guess you can go to 0 or negative. I've learned in crude oil things go negative. But when I look at that, it's so much harder. Gaining another 2-3 points is a son of a gun, whereas the upside, anything can happen. In the T-bond market, look at the sideways action we're getting. Now the bears are in control of this market. You've got the lower highs. You're now trying, if we take a look at this low, 178.15, the low back here was 178.1. So suddenly we've got lower highs and higher lows. I think you've stepped out of a trend and you're just drifting now sideways in that market. 10-year note, the identical thing. Look at how narrow these bands are getting. There's a big move about to come. My trick, my goal will be to try to catch whatever that is. Dollar index, look at the sideways action. It's going to be a trick to catch that one too. Eurocurrency, not quite the same. In the euro, I can argue you've got the lower highs and a higher low. It has not set itself up into a trend just yet. It keeps fighting now at the 18-day average, looking to see what's next. Close over the 18-day average and you could get the buy signal. Japanese yen, you've had two opportunities against the upper Bollinger Band and a sideways action for the bulls, if they had bought, and I'm not saying they did, to come out. Now you've got momentum down. You have a higher high, lower low. I don't see a trend out of that. When we see Bitcoin, Bitcoin lost its embedded readings. When you lose an embedded reading, I'll show you right here, you often make a run to the 18-day average. That's close enough for me. I don't care if it hits it or not. It made its move towards it. Could still come down and hit it, but that is close enough. Now we'll see what it wants to do next. It's correcting. When you lose an embedded reading, it goes to overbought. It's correcting that. You have to get both numbers under 70, and they're not there yet. In the differential between Brent crude oil and WTI crude, the differential's slipping away. They're coming crashing in on each other, which means WI has gained back a chunk of money on that. You can see how the market's been in an uptrend, overbought as can be. So now the danger is to the bulls. Are you going to get up to this 28.86, or are you going to just pull back right here? In gasoline, excuse me there. I have allergies. That is not COVID. I got tested for COVID to get the eye surgery. Jumped up and down because they told me I'm negative. In any case, higher high, lower low, lost embedded reading. I think the bulls running for the hill tonight. I think they're just going. They'll worry about the EIA after the fact. Why give up that kind of move that the market's had? And in the nat gas, here's what I'm expecting. You got too high here. I think you're getting too low here. I look for the market to come back. This is just a vertical price drop that's been very, very difficult. You know, one of the tools I use, and I talk about it in my morning subscriber video, are these pivot points. And I like pivot points because what they happen to do is they give you an idea away from like the 3-day average that I use so often, or the 18 for entry and other areas for exit. They give you different sets of numbers. And I look to see with them momentum as well. So what I've done is I created a 3-point video series that teaches you first what they are, the formula. Second, how to plot them on your chart. Third, how to tie momentum into them to give you what I'll call more confidence in them, because you're trading the momentum as the points turn against their different numbers. If you'd like to see it, it's simple. It's free. That's number one, so it's not going to cost you anything. All you need to do is go to our website, and on our website, go to the word free offerings. It's on the bottom right. Click on it. We'll get it out to you. You can also click here, and that'll come to you the same way. It's good to be back. I'll see you all first thing in the morning. Take care now.